Hello, this is Jeremy Wagner of Daily FX Education, and I'm here to talk to you about how I use candlesticks in my trading. Now you'll see up on the board here I have three different candle patterns. I've got the doji, which could be a bearish or a bullish pattern. I've got a hammer, which is a bullish candle pattern. And then I've got a shooting star, which is a bearish candle pattern. And it's not the name of these candles what makes them important. It's a common characteristic that they all possess. You see, when I'm out using candlesticks in my trading, one of the things that I'm looking for are long wicks, exceptionally long wicks. And I really like to see those long wicks occur in the opposite direction of the trend. So let me illustrate a couple of examples for you. You see here is a downward trend. I've got a downward sloping resistance line. Perhaps prices move down. They're working their way back towards my resistance line. So I want to sell short into resistance. And so one of the candle patterns I'm going to be looking for is a long wick that occurs to the upside. Now, a long wick may not occur, and that's fine, but the long wicks are something that I've trained my eyes to focus on. And so let's say we get a penetration of this resistance line, and I get a long wick showing up here, and let's make it a shooting star type of pattern. Okay. And so in this situation, you see prices traded up to these levels in the wick, but not for very long. Sellers came in, pushed this down. Perhaps even sellers were looking at a resistance line that is in the same area as to what I have right there. And so if I feel really good about the direction of the trade or the possible trend, then I'll go ahead and enter on the next candle and place a stop just above the high of the candle. But if this is an exceptionally long wick, like if you were to look at your whole chart and you don't see any wicks that are longer than what you see at this point, an exceptionally long candle, then a lot of times what I'll do is I'll set an entry order up a little bit higher on the wick. And so let's say I'm using this shooting star up here as an example. And by the way, what is a long wick? Well, to me, a long wick is where you have at least 50% of the length of the candle encompassed by the wick. So you see here this hammer, and here's the body of the candle, and so here's my wick. You can see from the high to the low that this wick is easily 3/4 or probably 4/5 the length of the candle. So it's probably 75–80% of the length of the candle. And in this situation, here's my high, here's my low, and the wick is possibly 2/3 to 3/4, 60, 70, 80% of the length of that candle as well. So a long wick is going to be at least 50% of the candle. So if this is a situation, if this is my shooting star that's showing up down here, then I'll look to place an entry order a bit higher up on the candle, because when this is exceptionally long, a couple of candles later, a lot of times prices will go back and it'll retest the wick, retest the high on this wick. And so I'll place an entry order up here. I'll place a stop up above the high. And then the neat thing about long wicks, this is one of the things that I love about trading with them, is that all I have to do is look to take profits at the low of the candle, and you can see, here's my risk, here's my potential reward, and I could easily gain a 1-to-2 or possibly even a 1-to-3 risk-to-reward ratio, and I'm simply just using the length of the candle. So that's what I love about using long wicks. But again, if I feel really good about the trend or the potential direction, then once it gets to the low, I may just move my stop, or I may take partial profits if I have multiple lots open. But if it's a really long candle, sometimes I'll just even use the length of the candle. So let me draw up a situation here with the hammer. So we have prices in an uptrend. They're working their way down. And let's say we get maybe not a hammer, but let's say we get a doji-like of candle here that forms. And so since I have this really long wick to the downside, again, if I feel good about the trend, I'll just go ahead and enter on the next candle, going long. Otherwise, I'll look to place an entry order down here towards the bottom, and then that way, here's my risk, here's my potential reward if I look to take profits here towards the top, and I easily get my 1-to-2 and sometimes even a 1-to-3 risk-to-reward ratio. And sometimes you can even garner up a pretty tight stop in that regard too. Now you're going to miss a lot of trades if you use that technique, and so you've got to keep in mind or be psychologically ready for the fact that oh man, I knew that the price was going to move up. But yet I waited for an entry order that never got triggered. So you're going to have a lot of trades you're going to miss out on, but if you do have that patience and discipline of going out and finding the long wicks, it's a very fun style of trading, and I enjoy looking for them. So I hope you found value in watching this, and I want to wish you the best of luck in your trading as well.